All right, everybody, let's do a sound check. Can you hear and see me okay? My background's a little weird. I don't know why. What's going on there? Let's see if I can get this fixed. Give me a moment. I'm getting a few things set up on my end. Let's see. There we go. That's a little bit better. I look red. I don't know. I'm maybe a little. I got a little bit of sun. My camera's weird. Definitely weird. I don't know. We'll see. How's everybody doing, guys? Guys and girls. You guys could hear me okay? Yeah, that's the plan, Pam. I'm going to try and do a fun little picture as much as I can. Too much golf today? Yeah, spend the day outside. Spend the rest of the day outside. It felt good. And there's Rips. Rips is going to be with me tomorrow during slow market, which is going to be fun. I'm excited to have him. But no, I made it past. I did okay. No pants down during today's golf. I didn't do good though. Doesn't mean I do good. If you guys ever played golf, you'll understand. I was hitting the ball good. I just 3-putt every single hole. But anyway, let's go ahead and get started. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach TBA. As always, that's not it. That is our TopstepTV Emotional Trading Journal link that I just posted. So, well, I guess I might as well talk about that I posted the link. So, now here is our Topstep risk disclosure, because we're going to be talking about the live markets like we do every night on slow markets. And there's our risk disclosure, because we all know that we all have our own agency, and because I'm looking at analyzing a trade does not mean that you guys need to place that trade, because we all take our own risk. This is hopefully a good educational class for you guys and not a signals class. I want to make sure I get that straight away. Today during fast markets was fun, and yeah, they were kind of pointing out, and you kind of see whenever I'm like, okay, I'm looking to get in long here, then the top step tilt kind of went to the long side, and then I was looking to short gold, and then the top step tilt started to move a little to the short side on gold. So I want to make sure we make that very, very clear that this is not a signals class. This is a educational class to talk about trading the overnight concept and talk about trading slow markets. I don't know. I don't think that's me. Maybe I got sunburnt. I don't know. I think it's just my camera, which is weird. I'll figure it out. But anyway, let's get to it. I'm gonna do what I've been doing lately, and that is the beautiful rapid fire analysis to begin the class, and then we'll get to some questions. And if you have questions, just type them in the chat. If I don't get to those questions, copy and paste. Don't spam them. We have an amazing moderator team who will feed me those questions. But yeah, thank you, Pam. I'm finally over that cough. I still cough a little bit, especially when I'm talking a lot and my mouth gets dry, of course. But let's get to it. Today was a very interesting day, guys. Here's the NASDAQ. You can see we had this huge rally up. We had a little bit of sideways, just 3 days, maybe 4 or 5 days of consolidation. Another move up, basically a couple days of consolidation. And so we're at all-time highs here on the NASDAQ. And yeah, I don't want to buy it up here. Like, I'm bullish the market, but I don't want to buy it up here, if that makes any sense. I would much rather wait for pullbacks. We kind of got one here the past 2 days, and that was a beautiful pullback to buy it into a rally to new highs. I would much rather wait for something similar. So I'm going to do that. I'm going to wait and see if we can get a nice pullback, maybe back into consolidation. I'm not sure. This is a very difficult point in the market to trade when we're at all-time highs. We don't want to short the market because we'll be trying to call the top. I ran into that during power hour today. Near power hour, I took a couple trades to the short side. To end the day, I gave back a little bit of my profit. And yeah, we're just at that point where it's too hard to short up here. So I'm sitting on my hands. I hate to keep saying that, but look, we do have this key level, right? This is a huge psychological level for the NASDAQ, which is 19,000. We're, just under 200 points away from 19,000. So we very well could see that very soon. We have FOMC minutes tomorrow. FOMC minutes, correct me if I'm wrong, guys, is a little bit old. And so maybe those FOMC minutes might be a little bit bearish and could provide an opportunity to buy the market. I don't know. I don't want to try and guess, but I would much rather us sell off and look for buying opportunities in this market. Yeah, it's not a fun place to be in the market, especially when you're a bull and you just want to wait for a pullback, but you don't want to sit there and watch the market rally without you. Pretty much the same. I don't even think I even need to drop down to a 60-minute chart. And browser, yes, NVIDIA earnings tomorrow after the close. We do have to be aware of that. And here was the day. The day summed up on the 60-minute chart. Essentially just buy the dip, right? This morning it was this was yesterday, buy the dip, and all these dip buys have been beautiful opportunities, and that's what it was this morning. That's where I made my money this morning. This is where Rips made his money, was buying that dip, and it worked out well. And maybe we get another one, right? Maybe it just sells off down again and we find another dip to buy. I'm not sure. That's what I'm going to look for. I'm not going to be selling up here. I tried to sell up around 780, 770s up near these highs to see if we get a pullback, and sure enough, we didn't. We just went and we made all-time highs, and now we're making all-time highs during slow markets. So that's NASDAQ. Let's take a look at crude oil. Give me a second. I'm going to get a drink. Like I said, my throat is getting really dry. I'll get to your guys' questions. I want to do a rapid fire here. So here's crude oil. I really do like crude oil buys. Yesterday you see how we ran that stop hunt at like 3 a.m. During the London session. I was looking for a buy limit down in this area, looking for some buys. Maybe we didn't even get stopped out. Maybe we got stopped out. It depends on where we had a stop loss. I didn't get in it because we have a contract rollover, and I think we're finally getting to the end of the contract rollover. Maybe by the end of the week, I'll feel a little bit more confident on crude oil. But same thing, I still want to be looking for longs in crude oil. Essentially, we did have that nice sell-off around 77, 77 and a quarter. And anytime we get down to the bottom of this zone, right? We're talking about zones, basically from like we have buy the dip mentality in crude oil. What do we want to keep? Everyone would probably say down in this zone is supply or whatever, and then up here's demand. Essentially, I'm looking to buy a dip and seeing if we could break out. If we do cross above this nice resistance level, I think we could run back up to 80s. We did test that $80 level, pulled back, and possibly are we making a higher low? So this could be possible. Essentially looking for little keys or clues in the market or breadcrumbs, and this could very well be it. Not too excited about crude oil. I don't want to be trading crude oil during this. Contract rollover is done in crude. Let me know, guys. Let me know in the chat. How is the contract crude rollover finally done into July's contract, in your opinion? I think it is. The price action's been really sloppy for crude oil, and I haven't really liked anything. Emilio, yes. Long opportunity, Nikkei. We'll look at Nikkei in just a moment, but yeah, we're not really selling off, and every single time, yes, it got switched on today. Okay, well, that's good news. So today, I'm looking to buy the dips and look for take profits up towards $80 a barrel in crude oil. Crude's been a bit messy. Now let's look at Nikkei. It's the Japanese market. I don't know about Nikkei. Yes, Hoag was saying this morning that volume of open interest has started to move over to the new contract. Okay, well, that makes sense. Maybe give it another day for myself till I feel confident in crude oil. Nikkei, the Japanese market, I'm not seeing too much on Nikkei. I mean, from a pure technical standpoint, we kind of broke down, right? Where this was being supported for the last, since the middle of May 10th, maybe 13th. And this has provided great long opportunities. And it looks like we just broke down that. And sure enough, when we broke down, support became resistance. And now we're starting to sell off. I'm hesitant to buy it, even though it could be a decent opportunity. From that aspect, I don't like it. But from basic support and resistance, right? We have resistance here. Maybe you have an argument to say this in these little areas could provide an opportunity to go get long on the Nikkei, but I'm not going to do it. Maybe I'm just a little bit tired today, and I made money on fast markets. I did place a trade on the Nikkei. I actually placed it when I first got out of the shower and I was preparing for slow markets. It was just one contract in and out. I ended up buying it at 700 at the open, and I closed it out at like 790. I made a quick $400 in my live account earlier, just on that retest. And yeah, if you want to get long on the Nikkei right here, this very well could be a decent trade. If you want to manage risk, sure. I'm for it. For example, if you get long here, it could give you a nice tight stop loss, and maybe you look to make a run up there. So in terms of a risk reward, this could be a good trade, right? It could be a decent trade. I don't know if I'm going to take it. I'm just a little bit hesitant to take it because we broke that trend that I was pointing out a little bit earlier. This trend right here that you guys could see. And so I'm hesitant to take it, and that's why. So I'm going to be hands off for right now, right? And then let's take a look at gold. This is a 60-minute gold chart. Man, that short gold during fast markets today was great, right? That short gold last night was even better. So shorting gold has been the play the past couple days from here to here and here to there. And maybe, I mean, we do have something like this, right? I mean, this is a bullish market here on gold. Let's take a look. Now, remember, guys, I'm looking at these markets for the first time with you. Man, I don't know. Like, it's hard to sell it now. Because there's a decent argument to go long, right? There's a decent argument to go long and see if we could have a run up. Because look, rally, come back and test it. Rally, maybe come back and test it. Is that possible? And the answer is based off the way gold has been reacting. Sure, right? We have a nice pop and then consolidation, pop, pullback. And that's the way gold has been reacting, right? I mean that's very basic market structure in a bullish market. And there can be an argument to say that gold will do the same thing because it's holding this trend, and maybe we do see a rally. The short was last night to play a trade back to the trend line. And so the short last night, I loved it. It worked out really well. The short today was a quick in and out. It only lasted, 10 minutes, and it worked really well. But Is tonight a night where I just say I'm not seeing any great trades from where we are at on any of these markets, and I'm going to leave it on a big pass. So let's get to some of these questions. I have some questions going in, and I'll go through these markets, and if I do see something at a second glance, maybe a third glance, and I say, okay, maybe this is setting up just like last night, right, where the markets were boring, and then immediately, boom, gold started to move, and I hopped in, and it made a great trade. So let's get to some of this. Bolo FX, which market for beginners? If you are a beginner trader, I dare recommend maybe something like, there's an argument to say crude oil, right? So crude oil, because it's $10 per tick. There's an argument to say NASDAQ micros, right? Micros, not minis. Minis is $20 per tick or per point. Micros is $2 per point. But then a lot of beginner traders, maybe ES. ES is definitely a not as volatile, not as crazy. So maybe ES and YM would make a lot more sense for a beginner trader. And we also have Forex futures. So if you come from Forex, and as Coach Jay was saying a week or so ago, we have Forex futures. So if you come to Forex, that is definitely a possibility. Is your chart always indicatorless like this? It really looks clean, and I want to do the same. Yep, how you see my chart now is exactly how I trade during slow markets. During fast markets, I have two charts. I have one that's a 5-minute or an hourly chart, and then I have a 100 tick. But in terms of indicators, no, I don't use any indicators. Do I recommend indicators? Sure. Yeah, I would recommend an indicator. If it helps you simplify your trading decisions, and it helps you as a trader, definitely use indicators, like something like everyone on TopstepTV, and there's a lot of people love the VWAP, right, for a basic direction, or an average true range, or some simple moving average. If you can simplify your trading, yes. The one thing I don't want to recommend is having a lot of indicators, because if there's not a reason for something to be on your chart, then take it off. I look like I'm someone in love. I look like I'm freaking tired. Okay, go on. Have you traded Bitcoin minute? No, I don't trade Bitcoins. The Bitcoin. Slow markets is always 1 hour, guys. Slow markets is 1 hour. So from 8 p.m. Central till 9 p.m. Central. Sometimes it goes a little bit longer depending on how everything goes. What's your thoughts on supply and demand strategy? I mean, supply and demand strategy is just as good as any other ones, right? Supply and demand, support and resistance. If you could simplify it and you could manage your risk really well, it's great, right? Sometimes 11 and yeah, 2. I've had a couple that went 2 hours. Goodwill Hunting, yeah, I was on Goodwill Hunting. That was me. Ooh, that's a good question. Memorial Day. That's this Monday, right? Is that correct? Let's see. Memorial Day is this weekend or this Monday? Markets are closed. Let's see here. Yeah, it's a bank holiday. Memorial Day. I will let you guys know on Thursday night if I will have a slow markets Monday. But if it is a bank holiday, if it's a market holiday, which it looks like it is, I might just take it off, guys. Monday the 27th. So most likely I'll take it off. We will see, because it's actually slow markets is that night, and the markets will open up. Yeah, it will technically reopen for slow markets. It's going to be very boring, but slow markets might bring that the fun over, right? There you go. Danielle's in the chat. Trading for half the day on Memorial Day depends on what you're in. The time may vary, but okay. Yeah, there we go. Sounds like there's going to be an email sent to everyone, which would make sense, and it will have the details. Do you think it's a good way to go without indicators and just focus on candlestick patterns? I feel I am missing out. At the same time, it forces me to really focus on market structure. So I've been getting this question a lot, and I just had this question twice already during this class. I would recommend trying indicators. Try them. No, I don't have any specific indicators because everybody has their own style of trading. Try one. Depending on what kind of trade, maybe a VWAP, maybe a simple moving average. Try and develop a strategy and trade it and be very simplistic about it. Maybe you like it, maybe you don't. But realize there's no indicator that works 100% of the time. Every indicator does not work 100% of the time. But some indicators could be very good and very helpful on helping you set rules for yourself and helping you simplify your strategy and maybe telling you when to get into the market and get out of the market. And it will help you measure, right? And not be so discretionary. No, I do not have your own I don't have my own YouTube. This is it, guys. This is my social media. You will not find me anywhere else. I don't like social media. I don't like Twitter. I don't like Facebook. I don't have my own YouTube channel, and the only thing I do get on every once in a while is TikTok, because I have some friends that send me funny TikTok videos back and forth. So that's fun. I'm just curious how snipe your take profits. Just going through your guys' questions. Trying to think of what we could talk about. What can we talk about? Tony R., I used to have a MySpace. What should we talk about tonight, guys? I'm really the market is very slow tonight. Let me show you something. Let me see if I can find something. I want to show it to you because this is really cool, and I think maybe I could share it. Let me find it. Building a trading plan, because I feel like building a trading plan is very important, and I have a great template. I have a great template. Maybe I could find out if I could share it. Basic trading plan. Let's see here. Okay, here we go. Let's talk about this, because I kind of made this based off of the way I trade a little bit. So you guys get to see a little bit of, I don't even know when I made this. Let's talk about it, okay? This is going to be something good to talk about. And maybe Danielle, if you want to make this its own video, this could be very, very useful. This might be one of the most useful things I talk about tonight. Actually, I'm being serious. Let's make this its own video. I am 100% for this. You guys get to see a little sneak peek into my mind. This is important, okay? So here we go. How does Coach Dakota trade? I built this trading plan as an example because as traders, we must have a trading plan. And here is a very, very basic outline of a trading plan. And let's go through this because you can add to it, you could adjust it, but having it in writing is extremely important. So here it is. Let's go through it. Number one thing for a trader, and this is why I had it as number one, is risk management. So wait, pull back just a little bit. This is a pullback strategy, okay? So as a trader, think of it as a football team or a soccer team or a basketball team, you have a playbook. Okay, so you have a playbook, and in that playbook, you have a list of all these different plays, and you say, okay, the market is doing this. And so you look into your playbook and you say, okay, based off of what the market's doing, this should be my plan. And so if the market's trending and the market's rallying up and up and up like it did today, I'm going to say, great. Today's conditions, today's market conditions calls for a pullback plan. How am I going to be buying a pullback? So let's talk about it. Well, risk management, trading a 150K account, maybe I'm looking for $200 per trade, $1,000 daily loss limit. If profitable, $2,000. So this is saying if I make $2,000, I now make my own personal daily loss limit is $1,000. So if I do lose, I will, worst case scenario, I made $2,000, I only give half back. And let me zoom in so it looks a lot better for you guys. There we go. That probably looks a lot better. Okay. Anyway, very important. So risk management on 150K account, I'm risking $200 per trade. $1,000 daily loss limit. This is my personal daily loss limit that you could put, right? Topstep, it's at 3,000, but there's nothing wrong with us putting our own daily loss limit. If you made 2,000, then, lock half of that in. I changed my daily loss limit to say 1,000. This is an example, okay? Pre-market routine, eat before trading, healthy food. Maybe you get an energy drink, a coffee. Maybe you have your own pre-market routine. Make sure I use the bathroom so I'm not watching the monitor, and then I get into a trade and I have to run and go use the bathroom. Meditation, some traders, myself included, maybe this could be really great. Meditate. Workout. Maybe you go running. Maybe you go 30 minutes to the gym before the market opens. Check for news events using an economic calendar. Watch Hoagland on TopstepTV. And there's a very basic pre-market routine. Next is, what time frames do I like to use? Well, maybe I use a daily time frame to look for major support and resistance. Then I zoom in, right? Just like a Google Maps, I'll zoom into a 60-minute time frame, and I will look for market trend. Is the market making higher highs, higher lows? Then I use a volatility gauge like ATR, average true range. Then I'll zoom into a 15-minute chart, and I will look for minor support and resistance. And I'm going to go through an example. We'll go through an example once I read through this. So maybe I zoom into a 15-minute chart and look for minor support and resistance. And then finally, I zoom even in further, a 5-minute chart, and then I look for technical patterns, and then I use the 5-minute chart for entries, exits, and trade management. And then market types, it looks like I did the NASDAQ. I will only trade if an average true range is greater than 30 minutes. Crude oil, I will only trade if the average true range is greater than 30 points. I will only trade NASDAQ if the average true range is greater than 30 points. And then crude oil, I will only trade crude oil if the average true range is greater than 30 cents, 30 ticks. And then here's a condition. So first condition, the market is trending. We have higher highs. We have higher highs, and this should be higher lows. Volatility, ATR, right? ATR greater than required. So as we said it, okay, there we go. There's my ATR. Trade setup. Maybe we get a pullback, and I'm saying at least 38% pullback, right? You could do Fibonacci's, whatever. I'm just saying at least about 30%, eyeballing it, give or take. Then I'm going to look for a technical pattern, maybe a bull flag, a three-bar reversal, or a break of consolidation as my entry. My stop loss, very simple, very basic, below support and resistance on the 15-minute time frame. Take profit at support and resistance on the 15-minute time frame. And then trade management. And like I said, I'm going to go through this, and I'm going to go through an example, and I will walk you through this. maybe I have a trailing stop, and I put my trailing stop at support resistance on the zoomed in time frame of 5 minutes. I'm scaling in, 4 contracts at entry, scaling out, 2 contracts at the beginning of support resistance, 2 contracts at the end of support and resistance. And so this was just a very, very, very basic structure of a trading plan. And yeah, create your own, right? You see, it's very simple. It's very easy. It just gets something on paper. Let me do this. I'm going to download this right now. Download. Come on. I'm going to download this, share it, and you'll get to see it on the chat. So, give me 1 second, and I'll download it and share it. Like I said, 1 second. You guys get this. Microsoft Word. There's the download. And I'm going to share it to you guys because you deserve it. It's very basic. Create your own. It doesn't have to be too complex. It doesn't have to be too complicated. I don't know how to share this, but I will give it to our amazing team, and I'll see if they'll share it. So let me share it. I'm going to share it to a couple people behind the scenes first, and I'll see if they could get it to you guys. I don't know how they're going to get it, but they will get it to you. So there's something very basic, right? Very basic, very simple. It's a set of rules. We could follow this. You could stick to them. It'll help you become disciplined. You can make it as complex as you want. You can make it as complicated as you want, and then you can make it as simple as you want. But this is very basic, very simple. So now let's go through an example, okay? Let's go through an example. I'm going to do that exact same thing. We said an ATR, so we're going to add an ATR to the chart, and let's say we're going to be trading like we did today. Today was a beautiful example. This is hindsight. So let's talk about it, okay? We're trading, and let's say during this time, during this huge rally that we had this huge rally up, and we say, I want to pull out my trading strategy, and I want to say, I want to be trading exactly what I went over. Now, I want to make sure that the ATR is above 30 points for the NASDAQ, and this is a 60-minute chart. Sure enough, we're about 30. Now it's below 30. The ATR is below 30, so I'm not trading. I'm waiting. I have to wait until the ATR gets above 30. And this could possibly be it, right? It's very hard because we're hindsight trading. But let's just say right here on this example, here's the rally. We sold off in this zone. Okay, that's about 38% minimum. And so here we go. We're in this zone. Now, this is hindsight trading, so bear with me. We're at the 30 points, so this is a very valid trade. And so I'm going to mark this on my chart, maybe where we would have been looking to buy the dip on a pullback based off that strategy. Next, we would zoom into a 15-minute chart based on that strategy. And sure enough, that's what we were looking at. We are now in this zone, and based off a 30-minute chart, we're going to identify basic support and resistance, right? Here is some very, very basic support, right? There's some support and resistance right here. There's also some right here. And so very realistically, we could be looking to buy this. This was resistance. This was support and resistance. So this could be very well 2 areas to be buying the pullback. So, definitely right here, we sold off through that one, and then we got down into this second one. And so we probably would have been looking at it when we first got to this main area. So we would have been looking at it when we got to this main support. Then we would have been looking at it when we got to this secondary support down here. And so we're looking to buy the pullback, right, based off our strategy. And as soon as we started to get down, we identified support and resistance based off the 15-minute chart. Now remember, our trade plan, it calls for us to execute the trades on a 5-minute chart. So we pull back up that beautiful trading plan, and it says, you know, like I read out, it says now we look for technical patterns on a 5-minute chart. We look for technical patterns, entries and exit, and trade management on a 5-minute chart. So we zoom into a 5-minute chart and we go back to where we were and what we were talking about, right? So we sold off, we're down to this support, right? And we are trading in hindsight. Okay, we're trading in hindsight. And we got to this first area and we're looking for like some type of technical pattern, a 3-bar reversal, a flag, consolidation. And so far, based off of this, you know, no 3-bar reversal, no consolidation, boom, sold all the way off. And now we wait for it to get to the second level, which is down here. And it looks like we did touch it, but you know, here is a technical pattern that maybe it would be hard to trade this, but this is just an example. We have this as a 3-bar reversal. This is a main, excuse me. So this is a main bar. I call this a doji, apex candle, hammer, call this whatever. The 3-bar reversal can technically be entering right here. So that would be my entry. This would be my entry. This would basically be my stop loss. And then my take profit would be the next resistance, which would be here or possibly up here. Now, however, the risk reward's not that great. So there is a valid reason to say maybe my stop loss is up below this consolidation, right? You could put that in your strategy. You could put whatever you want, right? As long as you could measure it, as long as you could repeat it, and as long as you can follow your rules. And of course, this is hindsight, and so it's a lot easier. Another one is maybe wait for a break above, you know, maybe wait for a break above consolidation, which would be waiting for a break above here. And scale in, scale out, right? Scale into 4 contracts, buy 4, scale out of 2, and then another 2. So play around with it. It's a great tool. I strongly recommend it. Have something on paper, have something on writing. And then you could fine tune it. You could adjust it. You could add to it. You could take stuff from it. So there you go. That was a great little 10-minute, you know, trading plan. How do we do a trading plan? Start with something very simple. Start with something very basic, and then build it from there. Like I said, it took me maybe 20 minutes. Yeah, 20 minutes at most to get this together and to build it. And I probably have about 5 of these, maybe like 5 of these examples, right? There's one for pullback. You could have one for a consolidating market. You could have one for reversals. You could have one specifically per market, right? This one includes NASDAQ, and it also includes crude oil. You could have one whole entire paper. So you could have a whole page for NASDAQ. Maybe you have a whole document for crude oil, and then you have another whole document for gold. So you can do this. I really recommend. And even if you don't do it, it's a good practice, right? To just put however you trade, put it on paper, put it in writing, have something that you can measure and you could adjust. Because if you can't measure it, you can't improve it. And there you go, Pedro Hernandez. I love the way you word that. If you can't explain your strategy to a child, it's too complicated. And I like it. You know, if you have a kid and you can't explain your strategy to a kid, it can very well be too complicated. Keep it super simple, and go through that. If you want to try something new in a different market, try it, and you can only improve, right? And it's something that you guys can. It's something you guys can fine tune and adjust, and yeah, I hope that makes sense, guys. I mean, it depends, Michael. There is beauty in simplicity. You could have your strategy as complicated as possible, but if if it's something as simple as, yeah, we want to buy the lows, sell the highs. I'm looking for a very basic pullback. Yeah. Solid. Okay. So there you go. That was a beautiful, quick rundown, 5-10 minute little video of how to build a very basic trading strategy, some very basic things, and it's something that I really do recommend. Okay, we got a couple questions. Okay, couple questions. Please ask Dakota if he makes a decision for an entry on the 5-minute or 100-tick chart. So my personal trading during the New York session, I make my decisions off a 100-tick chart, and the 5-minute chart during the New York session. But during the slow market session, I make a decision off of a 5-minute chart. So as I'm looking at this right here, right now, this is, man, I'm tempted to get short on gold because this is looking a little bit more bearish, right? We sell off, a little bit of pullback, and then is there an argument that we're going to have a continuation down if we do break this? I wouldn't be too opposed to getting into a short gold right now, just based off of the way we're looking on the 60-minute chart. But I don't trade off the 60-minute. I do like a short gold right now off the 60-minute, just looking at this price action. And if we zoom in, I'll get to some more of the questions in a moment, guys. Yeah, we'll watch it. If we do break down, I could see us seeing 24.13 again. We definitely could see some of these. Maybe we just see this tested again. If we break down, we just sell off just like we did last night and see these teens. That's a possibility. So anyway, yeah, I hope that made sense. Can you ask Dakota what time frame used with his ATR numbers? So based off that very basic trading plan, I was using the ATR off a 60-minute chart. You could use the ATR on the 5-minute chart, 15-minute. It doesn't really matter. The thing that matters is consistency. It's just like shooting a bow and arrow, right? You shoot a bow and arrow, or you're sighting, maybe if you've ever shot a gun, and you shoot and you shoot and you shoot. The matter is how consistent can you get, and then you could worry about fine-tuning it in to get it to where you want to. The key is consistent. You can either be very consistent at losing money, very consistent at breaking even, and then you could fine-tune it to where it's profitable. I don't care if you lose money, guys. If you can consistently do it, following a pattern and following a strategy, then you could adjust it. And it's really about consistency. Or you could use ChatGPT to create you a trading plan. Yeah. 3-bar reversal. I get asked this every single night, guys. What is a 3-bar reversal? Let me show you the best way to find out what a 3-bar reversal is. 3-bar reversal pattern. Here is a 3-bar reversal pattern. Right here. 3-bar reversal. Some like to say you wait for this candlestick to close. I like to wait until as soon as we cross above this. Google it. There's lots of examples, and yeah, 3-bar reversal. If you want to know any technical pattern, I use very basic ones. I used to have a poster behind me. Yeah, I hope that made sense. Actually, you know what? I'm going to go get that poster, and I'm going to show it. Give me 1 second. I'm going to go get the poster. You guys deserve to see it. So hold that thought. I'll be right back. All right, here we go. Here we go. Let's see if I could. All right, here we go. Can you guys see this? So this is the poster I have. This is. Ugh. this is what I have hanging in my bedroom. I legit have this poster hanging in my bedroom. Very basic, very simple. You could find it out. You could print it. You could print it off. You could put it over your bed, sleep with it, memorize it, whatever. I used to have all these memorized. I really did. I used to have this memorized. It's probably backwards because of the camera. Let me see. Let's see if I could get this. I'll get this figure. Let's see. How about? Oh, here we go. Here we go. There. Is that better? I don't know. That's probably better. You can see it better. So anyway, I used to memorize all these. I don't have them memorized anymore. Very basic. I'm not saying that these are the right ones, but you could find some type of thing online, print it out, and practice it, right? It's just like with anything that we do. It's all about practice. Now, what do I do with this? So there we go. That was a little off that. Anyway, what were we talking about? We still have 13 minutes. Let's go ahead and get to some more questions. Large banana. Okay. Can you help Dakota expand and how to use volume in the DOM? I do not trade volume and I do not trade the DOM. So Coach J is who I would recommend for that. You mean Topstep candle? I'm not sure. Here's a good question. This is very important, guys. This is a very great question. I'm just going to answer questions in the next 10 minutes. So how do I know when I missed a trade and I do not chase it? That is a hard one. That is a very hard one because you have to have a good set of rules. Create a strategy, follow your rules, and then you don't have much discretion, right? You don't want to leave trading up to discretion to where you say, you know what, maybe I missed it, maybe I didn't, I'm going to just hop in now. I don't know. It could be very difficult. It's probably one of the harder things in trading. Follow your trading plan as much as you can, right? And maybe you can totally get to the point to where you can have a little bit of discretion. Pedro Hernandez, yeah, I keep saying Apex candle because, yeah, Apex is an actual word. And I'm not talking about a company. Apex is a word. It's at the highest point of a trend, right? And you could Google it. It's a habit, right? So if we look at this, technically, I would consider this as a Apex candle. Google the word Apex, and it has nothing to do with any other company. It's just a word. It's a noun, the highest point or peak. Okay, so that's what I'm just used to saying it like. Yeah, that's the highest point candlestick. So there you go. Yeah, there's lots of terms that companies like to use to play on words. We all know that. Yeah. We're gonna. I'm gonna stay away from that. Not going there again, guys. Come on. Yeah. All right. Any more good questions before I end the stream? We have 10 minutes left, so utilize my time as well as possible. Man, NASDAQ, look, NASDAQ looking to push all-time highs again tonight. Yeah, we'll share it for you guys. Come to our Discord, and I'll even post it in my. I'll post it on Topstep Discord. In Topstep Discord, I have a channel, and I will post it there. but I'm also sure Danielle and the team will be able to send it somewhere else. I mean, it's very basic and simple, and you could use it for an outline. There you go. I just posted it in my channel in Discord. On Topstep Discord. Coughing. Gary Lee, don't spam the chat, please. I asked you not to spam it at the beginning. Because you spammed it, I'm not going to answer your question. But, man, NASDAQ pushing up to these highs. Let's see. Gosh dang it. Am I going to get into a long NASDAQ? Yeah, our amazing moderators will do it. Yeah, like I said, if you want a question answered, ask it. Yep, just ask the question. You don't need to spam it. 100%. Don't spam it. We'll see the question. If not, you can copy paste it. Right? There's a reasonable amount where I will miss questions, and you could copy paste it, but not spam. Yeah, Bluey Ivy, that's the hard one. Is when the market's at all-time highs, it's hard to get long. We just want to wait for pullbacks. If anyway, I'm tempted to get a long Nikkei right here. Why would I not get long Nikkei? This is looking like a really decent long right now. Yeah, do it. I'm long from 660. Oh, Coach J, where were you at earlier? Coach J is long Nikkei from 38,660. Oh, you hacked the system or something. That's a great trade. Jay's in it. Yeah, too much hesitation from me. Great trade, Coach J. Where's your stop loss? No, there's no micro Nikkei. I don't recommend trading Nikkei for new traders. Man, great trade. It sat down there too long. All right. Coach Dre out trading me on the Nikkei. Man, that's a beautiful trade. I was just too hesitant and too undecisive. Man, that stop loss 595. Ooh, that's a cheap trade. Great. I love it. I like that trade. Okay, couple more questions and I'm done. Is a tick chart a preference because of market structure and momentum? Yes, it's both. So everyone loves to ask me about my 100 tick chart. I love the 100 tick chart because I could see market structure happen really quick and at a smaller time frame, and I could react faster. That's all. During slow markets, I don't trade the 100 tick. Well, don't look now because there's the 100 tick as I'm talking about it. Yeah, that was a beautiful trade, Coach Jay. If you're figuring out risk on a 50 combine, would you use a percent risk based off of the max loss limit, 2,000, or account size? Ben X, my personal preference is I use a percent based off 50K. So if I had a 50K account and I'm trading a 50K account, I will trade 1/4%. For a 150K account, I would trade 1/4%, or I actually do trade 1/4%. So if I'm trading a 150K account, my risk would be $375. If I'm trading a 50K account, it's the same math. And so that way, it's as you grow your account, you could scale, right? You could scale as you grow. And I do the same thing in personal accounts. Man, there goes NASDAQ. All-time high in NASDAQ again. What is going on? Yeah, look at this. Another all-time high here in NASDAQ. And the Nikkei. Look, there's people who ask me, does the Nikkei correlate with NASDAQ? No. NASDAQ's making all-time highs, and we're selling off here on Nikkei. Yeah. NVIDIA excitement? Probably. I mean, a lot of people might maybe be excited about NVIDIA earnings. NVIDIA earnings tomorrow after the bell. We have FOMC. Retest on Nikkei. Man, everyone wants to talk about Nikkei. What have I created? I've created a freaking monster. Is this what you guys are talking about? Is that what you're talking about? Is this what we're talking about, guys? This is... I need to stop looking at this because now I'm getting tempted. That's the trade I'm looking at now, guys. I'll be on Fast Markets Friday morning with Coach Jay. Karen, and if you're in our Topstep Discord, ask around. They'll point you the right direction. We have some amazing moderators. Yeah, technically, from a pure technical standpoint, this could be the trade. And maybe I'll walk through this before I end class. I'm not going to trade this. Essentially, getting in on a retest can be valid. Also, the break right here at maybe 740 could also be valid. So if I was going to get in along here on Nikkei, those would be my two entry points. If this was the NASDAQ, I would buy probably 3 contracts here or 1 contract here at around 38,700 on the test. And then I would wait and I'll add to my position here on the break. I'm saying that if this was the NASDAQ, this is how I would trade it. I'm going to be hands off on the Nikkei because I think the trade today was right here. That looks like it was a much, obviously with hindsight, that was the much better trade. And then Coach Jay is over here getting in at 38,660. But that was a good trade, and it looks like we went down and we tested it. And what is this? This was resistance. Resistance maybe is becoming support. And if we break out of that, I mean, now I'm just kind of nitpicking, fine-tuning on a very small time frame. And then you can see how maybe it correlates here on a 5-minute chart. And as I'm talking about it, the trade is going to be working out. And then I'm going to feel bad for not taking it. And I'm going to just throw my keyboard across the room because I missed out. Oh, freak. Oh, wow. Well, there goes the NASDAQ. What? Did anything happen? Was there? Did I miss something? New Zealand rate policy. RBNZ rate policy. Well, okay, guys. I'm going to stop looking at the charts. It's just giving me FOMO. I'm not going to be placing any trades tonight, guys. So have fun. Have fun with that. Congratulations, Coach Jay. That's so frustrating. I get frustrated when I miss trades. I hate calling good trades out and then missing them. Okay, we're going to leave it there. Take care, everybody. Great trade, Coach Jay. You took it. Beautiful. Love it. It worked. Good night, everybody. Take care.